In New York, in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, inaugural Persuade. With fewer than 30 days until Joe Biden's presidential inauguration, he urges Americans to celebrate the milestone virtually. This as 60,000 Trump supporters refuse the election results with an online event of their own. From virus to stimulus, we'll break down all the conflicting signals from Washington. Plus, crypto in your stocking? The digital currency industry is on a tear. What does it mean for crypto's value in the new year? And whatever happened to Facebook's Libra? Remember that? We'll have analysis and outlooks. And Jingle Belly. Consumer trends in the age of coronavirus have shaken up the restaurant industry, and Gold Belly is satisfying a particular appetite. We'll hear from the CEO on demand and on growth. Those stories in a moment, but first, U.S. markets continue the downward trend of Monday, sliding amid lingering concerns over a new variant of the coronavirus, as well as lockdowns, mainly in Europe. Let's get to Bloomberg's Abigail Doolittle in New York with more.
Well, Vonnie, certainly a bit of a jittery day here for stocks. We have the S&P 500 fluctuating earlier in the day and then heading lower at one point, down 0.5%. But I think that the bigger trend to think about here is the fact that we now have this index down 3 days in a row. So the bears are gaining a little bit of traction. Fears around the virus, as you mentioned, the NASDAQ 100 up ever so slightly. So mixed messages, but investors, again, just a little bit cautious around the uncertainty about this new virus strain. What could it mean relative to additional lockdowns of some sort here in the U.S. and the strain on the economy? Apple, on the other hand, bucking the trend on the news that they are planning on getting into the electric vehicle market. That was the case yesterday, but another nice update. Tesla dropping on that news. Now, one thing that really stands out, continues to stand out, Vonnie, is the fact that you have both Pfizer and Moderna trading lower. We have some real sell the news action. Over the last 10 days, these stocks down sharply. Today, Pfizer down 1.7%, Moderna down about 9%. If these stocks are the beginning of some sort of sell the news, because you often do have that, these big rallies into expected events and then the selling action, will this lead into the broader markets? We don't know. But where we certainly saw selling, Vonnie, was for the travel stocks. We have the airlines and the cruise lines lower as traders fret that folks out there in the world are not going to be traveling as soon as had been hoped in 2021, especially with this new strain of the virus in the UK. But earlier today, Vonnie, you and I were talking about Peloton. That's one bright spot. The stock really popping here on the day, up. Look at that. Over the last 7 days, up 38%, the longest winning streak since the beginning of February. This, of course, as they bought manufacturing capacity for $420 million. Folks stuck at home, wanting to work out, stay in shape. Peloton wanting to meet the demand for those bikes. So we have this stock just on this absolute bullish tear.
Abigail, thank you. We were also talking about the anemic volume as well.
Oh, yes.
Really interesting into the end of the year. Abigail Doolittle there with all of the market action. White House aides say the president will sign a giant spending bill that combines coronavirus relief, regular government funding and tax breaks for businesses. The Senate gave final approval last night. With us now to discuss is Bloomberg's Mike Dorning in Washington, D.C. Mike, it's been a period of pretty substantial dysfunction in Washington, D.C. What will incoming President Joe Biden do in his first 100 days in order to try and smooth over that dysfunction?
Well, he's definitely trying to reach out to Republican leaders in Congress, and he's going to try to come up with some sort of next round of stimulus that will appeal to not only Democrats but some Republicans and try to get things going. But the big struggle it took to pass this package just highlights the challenges that he faces. It's been obvious for months that the economy is in need of a second relief. Since June, something like 7.8 million Americans have fallen into poverty, and it's been very clear, yet it took until now to get something done.
Yes, that's a pretty stunning number. Some 7.8 million Americans falling into poverty since just June, Mike. I'm curious, does Biden try to get another round of stimulus, or will he try and maybe work something out through an infrastructure package or some other way?
Well, he has signaled that he will seek another round of stimulus quickly when he gets into office. And the Democrats, view this as merely an interim round of stimulus to keep things from getting too bad before he takes office. We'll see how he does in passing that, but there are signs that there's stuff that people can support. I mean, he wants to particularly focus on infrastructure, which is often something where you can get the other side to support pieces of that.
Right. Now, as we know as well, divisions will be to the fore very early on in January before the inauguration, but in the new year with the Georgia runoffs. And, you know, when the incoming president says he'll govern for everybody, how does he do that so quickly after something, again, so divisive, bringing up the divisions in the country once again in January?
Well, I think that we'll be able to move past the January runoff once it happens, and it's more likely that there'll be divisive things coming in actions by President Trump in the final weeks. That primary will resolve itself one way or the other, or not primary, that runoff will resolve itself one way or another. And in fact, one of the reasons why McConnell was pushing to get a deal done on this is because he realized and told other Republican senators that the Republican candidates for Senate in Georgia were taking a big hit because Congress hadn't done anything on relief packages. Again, I think that he'll try to reach out with some elements of a stimulus package that can rally Republican support.
On the Republican side of things, what issues will Republicans want to take up? Will they be still looking for a corporate liability shield, for example, and how will they package those demands or requests or efforts?
I suspect they will. I'm pretty certain they will still be looking for some sort of corporate liability shield. And the Business Roundtable organization of CEOs was today asking that Congress keep pressing on that. There are other things that you can see them potentially wanting more for small businesses as time goes by. The PPP may not be enough over time. There's also groups like the independent restaurants have said they didn't get enough in this package, and I would imagine they would be coming back, and they have some influence within the Republican Party, small businessmen in districts around the country. So those are places where you could start to see some pressure on Republicans for another round of stimulus.
Well, there are nearly 80 tax breaks in this bill, in the virus relief bill, and it does include things like business meal write-offs and, you know, a permanent tax break for brewers, for example, and winemakers, breaks too for restaurants and the film and movie industry. But will that be enough to satisfy some of those industries? I mean, grants and relief are one set of things. Tax breaks are something slightly different, Mike.
Well, we know, for instance, the restaurant people have already said they're unhappy. So, yes, they got the meals write-off, but at least for the smaller non-chain restaurants, they feel like they're still hurting, and they've gotten nowhere near enough relief. And I would imagine the same is going to be true of the movie industry. These tax write-offs are helpful, particularly if it's a company with some profits. But for smaller businesses and for smaller players in these industries, tax write-off isn't going to do it.
All right, well, we shall see, Mike. The first 100 days, of course, will be when things look like they will be able to get done. So we know you'll be following those for us. That is Bloomberg's Mike Dorning. Coming up, Bitcoin's rally continues, but will the momentum last? We're looking at what's possible for the token in 2021. This is Bloomberg. The US SEC has launched a lawsuit against Ripple Labs and two of its executives who are also significant securities holders. The SEC alleges that the company raised more than $1.3 billion through an unregistered ongoing securities offering of its digital asset called XRP, which is the world's third largest cryptocurrency. In a statement, Ripple says it will challenge the suit in the courts to, quote, get clear rules of the road for the entire industry in the United States. And that, quote, the SEC has permitted XRP to function as a currency for over 8 years. To other crypto news now, Libra, known now as Diem, is the cryptocurrency touted by Facebook that's supposed to have launched as early as January. However, only a limited version of the cryptocurrency will launch at that time, amid, of course, a recent rally in Bitcoin and other altcoins. With us for more now is Bloomberg's Kurt Wagner. So, Kurt, the name change happened just a few weeks ago. There was a big scandal, obviously, and a big kerfuffle with regulators and so on with Libra, and suddenly that name and the whole idea of the Libra Association became toxic, so much so that PayPal, Visa and others left. Does this name change anything?
Well, it certainly doesn't change the overall plan here, which is to bring these coins. It's now a series of different coins, not just one coin, which is what the original plan was. The name doesn't change that, right? But what it does is it kind of signals this idea that they're starting fresh. Clearly, this was a tough year. There's been a tough 18 months for this project. We also saw Facebook change the name of the internal team that was working on Libra. So clearly, everyone kind of wants to put the idea of Libra behind them and start something new. So I don't necessarily think it changes the goal of the project, but I think it's more of a symbolic change than anything.
So as of now, Diem has 27 participants. Originally, Facebook had been looking for 100 participants when it was going to launch Libra. Will 27 be enough? Will others come on board?
I think others will eventually come on board if this ends up being a real thing. A lot of the companies that bailed did so because they didn't want to deal with the long regulatory road that I think was looming ahead of this project. So I think if there's a group of people that are willing to kind of put in the hard work now and get it going, if this ends up becoming a usable and reliable coin, which is what they hope, then I certainly think that they'll be able to attract a lot more people quickly. At this point, I'm just not sure how many people are willing to put in that test early on.
So politicians and regulators, as I was saying, became concerned about Libra. What's to say they won't become just as equally concerned about Diem?
Well, I think they are just as equally concerned, right? Because as we already said, this is just a name change. This doesn't change the effort. This doesn't change the goal. I think the one thing that could be different is when this project first started, it was driven very heavily by Facebook. And Facebook is a company that a lot of people don't trust right now. The way that it's now structured, Diem has its own CEO, has its own board of directors, and Facebook is no longer really calling all the shots like it was early in on this process. So it's possible that simply removing Facebook from the equation as the real driver here, that might do more for this than any kind of name change would.
Yeah, I love it. It's waiting to be issued a license by Swiss regulators right now. Kurt, do you think Facebook users will give Diem a try?
I think that in the U.S., people are very skeptical of Facebook and certainly anything that has to do with Facebook and finances, right? But I do think that Facebook has a slightly different reputation in other parts of the world. I think in India and Brazil, where we see WhatsApp and Instagram as these huge parts of culture and internet society, I think that they might have more luck in some of those markets than they would here in the U.S. So I don't think it's totally out of the question. But I do think that Facebook's reputation is a tough one right now. And I think that, getting them to get people to buy in on a financial product is certainly going to be a challenge.
All right, Bloomberg's Kurt Wagner, thank you for joining us and for that update. Of course, Bitcoin blew past the $20,000 mark this month, in fact, reaching past $24,000 after hitting a bottom in March below $4,000. It was the biggest rally since 2017, and it's leaving investors wondering if this time it might actually be sustainable and what Bitcoin's role could be into 2021. With me now is BlockFi CEO Zach Prince. So, Zach, just curious as to your thoughts first on Diem. Would you be a participant? Would you be a supporter?
Yeah, we'll absolutely be a supporter of the Diem project. I think that really what Diem is doing now, when they transitioned from the concept originally that they had with Libra, where it was going to be a single currency that was a net new currency that derived its value by being backed with a basket of currencies, is they're now saying it's going to be individual tokens for each major currency that they support, so dollars, euros. And this is already happening. In the cryptocurrency ecosystem, we refer to these things as stable coins. And the idea is basically you put $1 in a bank account, and then you create a tokenized version of that dollar that you can move around on blockchain payment rails. And this is one of the fastest and most exciting parts of the cryptocurrency ecosystem right now. It's growing tremendously from 3 billion at the end of last year to over 30 billion now in these stable coins. And companies like BlockFi and others support them in our platform. And there's a lot of things you can do with them that are a little bit better and more efficient than the traditional financial ecosystem because you're moving them around on blockchain payment rails. And I think that's what Diem will capture when they ultimately launch.
So that growth is obviously tremendous, but we're still talking about a size that you can wrap your head around, right? It's not so massive that it's equivalent to gold, for example, even. So how much more do you think that could grow in what kind of time? Does it become exponential at some point?
It absolutely becomes exponential, and I think that's why Facebook and the Diem consortium gets the regulatory attention that it does, because when you have something like that coming to market, it could get tremendous scale very, very quickly. And I think how you view these things really depends on your position in the global market. So a country like the US with the dollar, the world reserve currency, probably views these relatively favorably, at least from a fiscal policy perspective, because you're making dollars more accessible around the globe. Other countries, on the other hand, who aren't doing as well currently in terms of this global currency adoption and the competition that takes place, probably view it a little bit less favorably. And you're going to see those countries be the first to create their own digital currency.
So Zach, you mentioned some of the reasons that people give for Bitcoin's rally this year. There is, of course, the idea that everything rallied since March. It was really a low point in the year for all asset classes. But is this rally in Bitcoin in particular more stable this time, and does it continue?
It's absolutely more stable. Bitcoin is actually less volatile for the last roughly 6 months than all the major FANG stocks. And I believe that it will absolutely continue. You have macroeconomic factors, including fiscal stimulus as a response to the global pandemic and unprecedented levels of money printing, and also the fact that everything now in this COVID environment that's digital is preferred to its analog counterpart. And Bitcoin and other cryptocurrencies really capture both of those trends. And it's a unique investment that is both a hedge against inflation as a store of value, and something that has a venture capital type profile in terms of the return distribution, and could very realistically 5, 10, 20, or 100x even from where it is today. So it's done incredibly well. If you think of it as an asset class, it's the best performing asset class of this year and of the last decade. And the narrative and the conversation and the types of firms that are participating in terms of the caliber and quantity has increased tremendously. So it's not the crypto of 2017, it's now the crypto of 2020. Bitcoin is on platforms like Fidelity. You've got derivatives on the CME. You've got some of the smartest investors in the world, like Paul Tudor Jones, Stanley Druckenmiller, and others, saying they're buying some. And you have fintech platforms, every major fintech platform integrating with it.
And central banks talking about it now as well. Zach, thank you so much for joining us this evening. Zach Prince, BlockFi CEO. Coming up, Softbank joins the SPAC craze. We'll have details next. This is Bloomberg. Softbank has filed for a $525 million blank check share sale to buy a company it has not previously invested in. The SPAC will be overseen by Softbank Investment Advisors, which also runs Masayoshi Son's $100 billion Vision Fund. For more, I'm joined by Bloomberg's Crystal C, who's covering the story. Crystal, it's a fascinating story, another adventure by Softbank, and of course, the Vision Fund leaders are the leaders of this SPAC. The head of Softbank's Vision Fund is the chairman and CEO of the SPAC. So I'm curious, will investors trust these people, so soon after something like the WeWork scandal?
Yeah, that's a great question. They had a fair share of challenges in the capital markets in the past year. Like you said, WeWork IPO didn't quite work out in 2019, and they try to exit on. There were political pressure on ByteDance, their other investment, so they really had their fair share of challenges. But then they also had exited several companies actually through a SPAC. For instance, OpenDoor, which traded yesterday. It's one of the Softbank Vision Fund's portfolio company, and it merged with a SPAC that is backed by a serial SPAC deal maker, Shamath Papatia. So it seems like Softbank really is getting into this game.
We're just losing
technology target. So yeah, it seems like they're really trying to tap into what they already are doing with the Vision Fund.
Now, Softbank has said that it will address sectors, and it's given a whole wide range, right? Mobile communications technology, robotics, cloud technologies. It also says that it won't invest in anything in which Softbank has a stake, but it sort of left the door open. It is very possible that Softbank itself will see some exits from this.
Yeah, so according to a person familiar with the matter, they don't want to invest in a company that they already affiliated with, but like every institutionally backed SPAC, there is language in the prospectus that filed yesterday saying that they are allowed to invest in companies that they are already affiliated with. So that, that expands the universe of company that they can look at, they can acquire, they can merge with. They're good at tech, like I said, and they're looking for tech. So hopefully their expertise running the Vision Fund can help the SPAC investors that are giving them $500 million to find a good target.
Yes. Now, in terms of a target, will Softbank have a lot of competition? There are more than 200 SPACs this year that have launched and are looking for a target, and many of them with excellent sponsors. So, if you were a company that wanted to go public and now you have the option of going direct, right? The SEC just decided that. Would you be inclined to want to be taken seriously by Softbank?
It is a crowded market. Like you said, there are so many different SPACs outstanding. Like Goldman Sachs and Citigroup, they have both predicted that in the coming 2 years, SPAC merger is going to be, 250 billion to 300 billion worth of merger volume. With 200 SPACs outstanding, they have to not compete against just the SPAC sponsors, but also, like the IPO, like the direct listing options. But what's in for SoftBank's SPAC is that they have a forward purchase agreement, which gives them a little bit more certainty when it comes to the deal closing. They have committed like 250 to 300 million in capital, so it gives them a little bit of an advantage compared to other SPACs.
Thank you so much. We will continue to follow this through your reporting, Crystal C. Coming up, we're going to be talking about a major change to how startups can make their trading debut. Welcome back to Bloomberg Technology. I'm Bonnie Quinn in New York, in for Emily Chang. Hot tech companies and other startups will soon be permitted to raise money on the New York Stock Exchange without paying big underwriting fees to Wall Street banks. The move threatens to upend how IPOs have been conducted for decades in the United States. Joining us now to discuss is Ted Smith, partner and co-founder of Union Square Advisors. So Ted, this really makes it even easier for startups to raise cash. Just your broad reaction to this move.
Well, thanks for having me on, Vonnie. Really appreciate it. And it's definitely a sea change in the IPO market. Direct listings have been available for some time, although very few companies have availed themselves of that option due to the fact that they couldn't raise capital going that way. It was merely a mechanism by which they could see their shares begin to trade in the public markets. The change today that the SEC authorized for the New York Stock Exchange, which allows companies to also raise capital in a direct listing, does bypass the traditional IPO process and will mean a big change for how underwriters are able to help companies who seek to go public.
Of course, we did see, Palantir go that way in September, so that was one recent, example of a direct listing. But what does it do for investors? Is it possible now to evaluate a company well enough before it goes public in order to be an investor in it? Does this take away any investor protections?
No, although some have argued that investor protections would be weakened, the SEC didn't find merit in those arguments. Ultimately, this is going to rest on the ability of companies and the need for companies to promote full disclosure, to make sure that investors understand their business. the risks and potential pitfalls of those businesses as part of the overall direct listing process. And we'll find our way through to that, where investors will remain confident in the investments that they make in these companies that get public through a direct listing. And it's not going to be the approach that every company takes at the end of the day. There will still be regular way IPOs, and
yes, I'm just jumping in.
We'll have multiple ways for these companies to get public.
Yeah, we just missed a tiny portion of your sentence there, Ted, but let me move on and ask you, what about the company itself? Does this make the incentive system different? So if you can go direct now, is there, you know, sort of the attraction of going maybe too soon? Are companies going to be sort of lured into going public maybe perhaps more sooner than they should?
I think we'll find some companies who will test that boundary. But the reality of it is, Bonnie, that we think that in the current market environment and the way the IPO markets have evolved over the last several years, it really is a place for larger companies to play, to become public entities. Gone for the most part of the days when companies would come public with valuations significantly south of $500 million or even $1 billion. So we don't think particularly early stage companies are likely to try to come public under this earlier than they might have otherwise with a regular way IPO.
How does it change the way a company is priced and valued, Ted?
Well, in many ways, what it's going to allow a company to do and the investors to do is to very quickly get private investors leaving a lot of money on the table. So one of the things that many folks, Bill Gurley has led the charge, among others in Silicon Valley, is this notion that the one-day IPO pop requires these companies to ultimately leave a bunch of money on the table when their trading prices skyrocket on the first day or in the first few days after trading. So this mechanism allows them to avoid that for the most part and have the trading level, the appropriate trading level for the company be established much earlier in the process so that those companies don't cede that uptick in the valuation exclusively to the new investors. It's certainly
news that Silicon Valley and venture capitalists are welcoming very, very much today. Ted, I want to ask you more broadly about the outlook for next year and for deals, but also, you know, companies going public, and particularly this SPAC explosion. You know, it's what we're all talking about now, these 200 plus SPACs, you know, perhaps most largely the Bill Ackman SPAC. He, you know, said he was looking for a mature unicorn. How many mature unicorns are out there in at least your field?
Well, we think there's, you know, enough to fill the SPAC dance card, at least at that end of the market. We track, 50 to 100 plus companies that could be targeted or thought of as unicorns. So as we look into the large scale SPACs and those that are targeting companies that are at that end of the market, we think there's going to be plenty of interest. But we also think this is also sort of the traditional SPACs, those that are 250 to 500 million in value or up to $1 billion in terms of the capital that they've raised. And so we think it's going to be very active in tech in the unicorn and the early stage unicorn phase for 2021.
Speaking of that, Ted, if you had a company that was maybe around that kind of evaluation, would you be pushing them towards the Softbank SPAC if Softbank showed an interest, if the SPAC sponsors showed an interest, or is that something you'd shy away from? Would you rather go direct now?
Well, I think what we're going to advise our clients is to look at all your exit options. So there's always been the regular way IPO, and as I said earlier, we think companies are going to continue to evaluate it, and will continue to pursue that as one potential path. There is the direct listing option, and whether it was SoftBank or one of the many other SPACs that are out there, we think that should be taken into account as one alternative. Certainly, the direct listing that we've been talking about here, and then at the end of the day, the data show that the vast majority of at least venture-backed companies who ultimately achieve an exit get their exit through a traditional M&A process. So the sale to a strategic buyer or to a financial sponsor as the way that they're ultimately going to get their first taste of liquidity. And we think that outcome, an M&A outcome, is still going to be far more prevalent than any of the types of approaches to an IPO that might be undertaken by these companies.
Ted, is there an urgency around Silicon Valley and in general among VCs right now to get some exits under the belt while valuations are still the way they are, given that we really don't know how this pandemic is going to play out in 2021, what the economy is going to look like, and if the market is going to hold up?
Well, certainly there's a desire to pursue the market opportunity that exists out there, given that valuations are high, to your point, Bonnie. I don't think it's an urgency in the sense that people are rushing for the doors to try to get companies public before they're ready. But there certainly is a desire to take advantage of the current market environment where there are significant valuation multiples, in many cases at all-time or at least secular highs. So we continue to see various parties in the venture community evaluate those exit options, which again include M&A as well as their public market options.
Ted, can't wait to catch up with you again very soon. Ted Smith is co-founder and partner at Union Square Advisors, and thank you for joining us. Coming up, time for Tesla to step up its game, perhaps. Apple is said to make an unexpected foray into the autonomous vehicle sector and have what it takes to be a major force. That story next. This is Bloomberg. Apple could pose a new major threat to Tesla, GM and Ford. The iPhone maker is reported to be building its own self-driving electric cars, targeting production in 2024. Apple shares climbed to near record levels on the news, while Tesla fell as much as 5.5%. For more, I want to bring in Bloomberg's Mark Gurman, who covers Apple for us. So Mark, how do you see this playing out? Because we've thought about an Apple vehicle for quite some time now, and it looks like it's still a number of years away, but Apple seems to be taking the bull by the horns, as it were, these days.
Yeah, that's exactly right, Vonnie. I mean, the Apple car has been in development with, in different incarnations since as early as 2014. And what we're seeing now is indications from Reuters that they now intend to put the car in production as early as 2024. Personally, I feel like that date is a little ambitious, and it's a little earlier than I would expect such a car to come out. But clearly, all this talk has, brought out Elon Musk and others, of course, investors as well, talking this up.
Right. It's definitely caused ripples today through the market, and plenty of chatter on Twitter about, potential partners and so on. It seems like Apple might need a partner. Is that how things look to you? Would it need to partner with an OEM or maybe even Tesla?
Yeah, so there's different types of partners when it comes down to a car project. One, there could be an instance where Apple fully designs the cars and then partners with a manufacturer like a Magna or an equivalent to Foxconn to actually build the car. Then there's the idea of partnering with an existing car maker. That's where Tesla would come into play, or a Toyota, or a BMW, or Volkswagen, et cetera, which would basically come out with a version of their car with an Apple twist, an Apple self-driving system, Apple software. So there's different directions Apple can take this project. And then there's the other approach where they can simply make their self-driving system and apply it to an existing car maker, right? There's 4 or 5 or even more directions Apple can take this project, and the exact route they take is not entirely clear at this point. But Apple has traditionally went the route where they design and develop everything, they sell it under their own brand, and they partner with a manufacturing partner like a Foxconn to produce it. Well,
it certainly piqued Elon Musk's interest among those of us who were following the whole saga today, because he responded to somebody in a chatter about batteries, in fact. And then his second tweet was that during the darkest days of the Model 3 program, I reached out to Tim Cook to discuss the possibility of Apple acquiring Tesla for 1/10 of our current value. He refused to take the meeting. So on the one hand, it says just that there was an effort on the part of Elon Musk to have Tim Cook get interested in Tesla, but it's not any clearer from this tweet whether Elon Musk would be open to a partnership or even an acquisition of some kind now, right, Mark? This is all in the past.
Yeah, I mean, today, Apple definitely can't afford Tesla. I'm not really sure who can afford it, right, with over $603 billion, I think, at this point, market cap. But back then, at $60 billion, imagine Apple using, 1/5 or 1/6 of its cash reserves on what Tesla has become today. I mean, I think if Apple was to go back in time and know what Tesla would turn out to today, they definitely would have taken that meeting. So it might have been a little short-sighted on the part of Apple back then. At the same time, they were dealing with what Musk was calling, quote, production hell. So there were some issues that Apple clearly would not want to take on at that point. And during that period in late 2016 through 2017, that's at a time when Apple was really weighing what it wanted to do in the car space. So perhaps it was a little too early to pick Apple's interest, and the timing wasn't right. But Apple, I think if they could get... Oh, go ahead.
Well, I was just going to say, Apple tends to do things pretty well. Maybe not the very first iteration of things, but it tends to do them well when it does them, design well and so on. Is there a possibility here, a strong possibility, that Apple could eventually give Tesla a run for its money in the electric vehicle space, which is going to burgeon anytime now?
Absolutely. I mean, they've tried 2 or 3 times already to get a real Tesla competitor off the ground. It just didn't work out. And for what I've seen, they don't have the talent or the resources at this point in terms of people and technology to actually get out a real Tesla competitor. It's going to take some time. That's why I feel like this 2024, 2025 timeline is a little bit too early.
Yes, exactly. These years are going fast, except for this one. Mark Gurman, thank you very, very much. That is Bloomberg's Mark Gurman on the Apple Beat. Rescue financing for troubled companies amid the coronavirus pandemic remains a front and centre concern at the end of this tumultuous year. Avenue Capital's Mark Lasry discussed that and the anticipation of a vaccine-driven recovery taking hold next year. Have a listen.
You're seeing that there are problems in a number of places, but there's also growth. So for us, really what we're finding is opportunities where we can invest in situations where people need capital, and we're providing that capital, but we're doing it at a pretty steep price.
When you clear a balance sheet out, you are now clearing within the reality of a Fed at the zero bound. Has the Fed distorted your part of the hedge fund world?
It actually has. What's ended up happening is it's made it easier for companies to borrow money. So anybody who could borrow is doing so, but then what it's done is the reverse. If you can't borrow, then you've got to deal with folks like me. And if you're doing that, we're able to charge 12, 15%. So it's kind of odd, a zero rate environment, yet we're still charging 12 to 15.
I love that you say, otherwise you've got to deal with me, and you don't want to deal with me. Mark, I do wonder, when you look at distressed investing going forward, how much of this is simply who knows bankruptcy law best? And I ask this of you, knowing that you did clerk for a bankruptcy judge in the Southern District of New York. So is that really what this game has become?
I think you've got to understand bankruptcy law, because what ends up happening now is you're going to have a number of restructurings. But I would tell you the most important part today is really understanding the balance sheet of a company. That if we're going to lend, are we, super secured? Are we senior? Where are we in the capital structure? Because things can change on a dime, and you want to make sure that you're covered. So I would tell you the capital structure is going to be a little bit more important, but you better have that legal background.
Well, embedded in this is the assumption that perhaps, or my presumption, that recoveries are not going to be as robust this time around, given how much debt has been incurred and given some of the erosion with some of the covenant light loans that we have seen. How much lower will recoveries be, and how much fiercer will the battle be over who gets what?
Oh, I think recoveries will definitely be lower, and I think the fights are going to be absolutely insane, because everybody's going to be fighting over a smaller pie. So that's why the focus is really where are you in the capital structure. But you're going to have lower recoveries. It's hard for you not to, mainly because of what you said, which is that people have taken on more debt, and there's less equity value there.
Mark, I want to talk about market drawdown, sharp ratios, and the ability to make 2 and 20, but that's going to have to pass. I've got a horde of people that want to know if you can bring the glory of Elsinger and Oscar Robertson and the Milwaukee Bucks back. What is the plan forward after signing this gentleman for $1 gajillion million? What is the Bucks plan into 2021 in the NBA bubble?
The plan is simple. It's to try to win a championship. The execution of that plan is going to be kind of hard. Look, we're going to do everything we can, and I think we've got probably, our big three, which is I think second to none, at least in the East. So I think we'll have a pretty good shot. I think everybody's pretty excited. I think the hard part was really re-signing Giannis, and the fact that we were able to do that is actually great for Milwaukee. It's great for small market teams, but more important, it's great for our team.
Avenue Capital Management's Mark Lazary there. This is Bloomberg. Well, some are celebrating the passage of a $900 billion relief bill by Congress, but two of the hardest hit sectors of the U.S. economy, restaurants and bars, were not allocated direct funding. One online food marketplace, though, hoping to save restaurants and small businesses one mail-order meal at a time. Joining us now to discuss is Joe Ariel, founder and CEO of Goldbelly. And Joe, it's an absolute pleasure to speak with you. You've had obviously tremendous growth through the pandemic. You were at 350 merchants at the beginning. You're at what, 700 now, doubling in that space?
Yeah, that's right. More than 700 merchants, doubled our customer count as well. And obviously we're playing an instrumental part in really helping many restaurants survive and really just bringing happiness to people across the country who are getting, food in a box from places that they love, chefs that they love. And so it's been a crazy time.
Yeah, I mean, the website is amazing. It feels like you've brought together all of these merchants' key dish, right? The dish that people leave their restaurant talking about, or, that pie from North Carolina X bakery that people talk about all over the country. You can now get that. And, that's something that wasn't there before. What's the relationship revenue-wise between the merchants, yourselves, and the end customer?
Yeah, so we work with every merchant. I mean, part of our magic is we've created this ecosystem that did not exist in the world. And we call it food e-commerce. And really, it's a platform that's empowering consumers to now have these foods that they love from anywhere in the country. And on the restaurant side, we've unlocked this supplier base that makes the best food, but there's tons of pain points for them in shipping, in managing e-commerce and marketing online. So brick by brick, we've established every relationship, curated every package, and we work with every food maker to actually create not only just what the products are, right, but the pricing structure, the amount of servings in each package. So it's really on a case-by-case basis.
Do merchants pay you, Joe, or do they give you, a margin off the top of the order? Do they pay you just to be on the side? How does all of that work?
So we get a percentage of each order. We don't take anything from the restaurant. The restaurant and with us, we establish the actual pricing, and then we figure out the shipping costs and all of the ancillary costs and figure out what the consumer will pay.
Yes.
So it's kind of a backwards model, but everything is case by case with every merchant.
And so then, obviously you want to expand. You're already expanding massively. Your last funding round was $20 million, 15 of which came from Danny Meyer's Enlightened Hospitality Investments. It was a Series B. That's the one that we know of. How are you looking to go about raising more capital now? What's next for Goldbelly?
Well, so for us, we are just so focused on the craziness that the last 9 months has brought. And the holidays are our busiest time. So we're head down, trying to execute, trying to make people as happy as possible, trying to create a bigger ancillary, incremental, asynchronous revenue stream for restaurants. And, all that will work itself out in the new year, I'm sure.
Yes, I'm sure, because at some point you will want to get on that. Tell us about the day that Chrissy Teigen talked about getting a Goldbelly delivery. Did you notice an uptick in orders?
We did. Chrissy is a great fan of the platform, and at that time we had actually never communicated or met, but she was a frequent customer, and she's ordered everything, including her son's birthday cake, which we facilitated from the Cake Boss, Buddy Valastro.
Yeah, I'm looking at it right here now, and I mean, just scrolling through, you've everyone from Marcus Samuelsson to Magnolia Bakery, and Emmy Squared, all the New York joints, but joints from all over the country. Joe, what do you like to order from Goldbelly?
You're asking the wrong guy, because these are like all of my children. So, it's every day is a different thing. But as you may know, my original passion was from college in Nashville, Tennessee. So I fell in love with Southern food and soul food, everything from hot chicken to buttermilk biscuits to dry rub barbecue. So that has a special place in my heart. But I will say, if I wasn't a New Yorker, bagels, lox, cream cheese, pastrami rye would certainly be one of my favorite comfort foods.
Well, we are getting hungry now, Joe, so we better leave it there. But I do want to point out that your initiatives next year will include Goldbelly Live, which will be a cook-along series, and also some chef meal kits, which already are available to a certain extent. Goldbelly CEO Joe Ariel, congratulations and thank you. That does it for this edition of Bloomberg Technology. Bloomberg Daybreak Asia is next. This is Bloomberg.